Good evening, folks. This is Andy Pedrasso with Special Effects Academy. We're on the start of the week session in the Forex trading room for July 5th of 2020. Everybody in the U.S. and her colonies had a fine Independence Day holiday, and you're all ready to come back to trading. We will be going through our standard agenda. Look at the prior week's results, our currency strength meter, fundamental announcements scheduled for the week. Look at the charts on the dailies, any setups we see in progress, and a few words in conclusion. It was a relatively flat week, so the long-term and intermediate really haven't changed much. The long-term ledger indeed has changed nothing, except for a little bit of swap costs throughout the week. We still have the same open trade from back mid-June, so we're coming on 3 weeks of that trade being open. It goes from a little bit negative to a little bit positive, but really hasn't moved from the top of the chart. We're trying to trade it down. We'll look at that chart when we get there. The intermediate is down a couple of percentage points on a couple of trades that closed against. Again, reasonably flat, all things considered. We'll be going in and out of trades that way until the market does resume its course in either direction. The only casualty was the short-term ledger. We did take a bit of a higher hit in the 7% range as 3 of the trades went against after a really good start to the week. So it looked like the week was going to move, but then it turned around and did hit our stop losses on all but 1 of the 4 trades that were opened. And again, the short-term ledger is, or the short-term account rather, is supposed to be a little bit more volatile than the others, so this is about to be expected. It's par for the course. Notes and opportunities for improvement. We're still in a stagnant, sideways, bouncy market. As I said, the short term wasn't too kind. The other 2 accounts are, in grand scheme of things, they are flat. We do have pending orders in place in the intermediate term account to capitalize on any significant movements when they happen. In other news, some locations across the world are already doing a second shutdown as virus cases spike after the brief reopening. So there is no end to the coronavirus situation, or at least no end that we can see at this point. It looks like we're going to be just going through this for quite a while, maybe a year, maybe more. It might be something that we end up living with for the foreseeable future, or at least until a vaccine gets released. And regarding vaccines, most viruses do not have vaccines. Why everybody thinks that this one is going to be the exception and we're going to come up with a vaccine in the short term, well, I hope they do, but historically, that would not be something I would be expecting. I would think that at some point we're going to just grin and bear it and realize that everybody eventually is going to catch the virus, and some of us will fare better than others. It's a little bit cold to say it that way, but it is reality. And as traders, you have to focus on reality and not on wishful thinking. Rioting and protests continue in the U.S. throughout the Independence Day weekend, so no change there. They seem to be slowing down a bit. It's not as brutal as it had been a month ago around the Memorial Day holiday when the events triggered these riots and protests. Still, they continue going on. Oil continues to make gains. Silver and gold are holding steady. Our live event, as I mentioned last week, is being rescheduled, or has been rescheduled, to September 30th through October 2nd. I haven't updated the website, but I promise to get to that sometime this week. Moving on to our relative strength meter, and this is the new presentation. Owanda took down the format I was using before. So if we look at the extreme right-hand side of the chart, we'll see the monthly and the weekly, and we can see the movers were pretty much focused on the Australian pairs, definitely big movers. The pound also did some good moves, and the Canadian. So those were the 3 currencies with the most volatility throughout the week. On the monthly, the big winners, if you can call them that, they really are not anything big, are the pound Canadian, the pound JPY, the pound dollar and the Kiwi dollar. We had a significant move in gold throughout the month where it lost a good chunk, but again, it's still very close to its historic highs. Fundamental announcements for the week. It's a pretty slow calendar. We've got the interest rate decision out of the RBA, Australia, and we have the employment numbers coming out of Canada. So we'll be trading both of those live Tuesday, really Monday night into Tuesday morning. So a little bit after midnight tomorrow. Going into Tuesday wee hours, we'll be trading the RBA, and Friday morning, 8:30 a.m., the labor report out of Canada. With that, we move on to the charts. We can see that oil continues to maintain its most recent high at around $40 a barrel. It has tried to retreat from that a couple of times and hasn't been able to, and it finally broke above 40 again late last week. So nowhere near the previous range of $60 to $70, but still much better than the single digits that it was at towards the end of April. Euro dollar, and I promise I'm going to clean up this chart. It's getting a little bit too busy, and some of these trend lines are no longer valid. Well, they are valid, they're just no longer relevant. But we do see that the euro dollar is sideways, very bouncy, moving in both directions, doing a bit of what I like to call a fishbone. We have the spines poking in both directions, but ultimately it's staying right at the middle where it started. So no net gains, no net losses on the euro dollar, but a lot of volatility throughout the week. Pound dollar, mostly up for the week, but again, in a very tight range. We're talking less than 200 pips moving up mostly. And after the middle of the week, it simply just hovered at the level of support at the 174.75. So really not moving much, still very much inside a wedge, and we're waiting for a breakout in either direction. USD JPY again started very bullish and then collapsed. This was one of the ones that really faked us out. It looked like it was getting a nice bit of traction, and then towards the end of the week, it just towards the middle of the week, I should say, it collapsed back and then ended the week flat. USD Canadian also mostly directional. It had a nice drop towards the beginning of the week on Tuesday, and then Wednesday, Thursday, Friday really didn't move much. So we can say that it wasn't really sideways, but yeah, it was. It never really broke support and didn't give us anything we could latch onto. USD Swiss also sideways, a bit of a, what is that? It's a little bit over 100 pips worth of a channel, and it's staying closer to the bottom of it. So this is one where we're really waiting for a breakout, very likely towards the bottom on even the slightest dollar weakness. But until it happens, we'll be observing. Aussie dollar, and this is going to be pretty much the same for most of the Aussie pairs. They are sticking very close to their most recent high, but they have gone sideways. So we have it trading mostly towards the level of support at the 67 level, trying to move away from it to the top, but really not getting any traction. This is a prime candidate for a reversal at some point, simply because of the speed at which this thing moves. Of course, if it does break the top again, there is no telling where it will go, but it does look like all the Aussie pairs are running out of steam. Kiwi dollar, we can say pretty much the same thing about the Kiwi dollar, except it never reached a prior high. So we've got a high towards the end of 2019 at the 67.25 level, and it is still lacking about 200 pips, almost 200 pips to get back up there. It has gone sideways. No telling whether it's going to have the strength to do a breakout towards the top and do a true test of resistance. So another one that we're going to be looking at very closely to see any short or intermediate term opportunities. But really the long-term money, in my opinion at least, is going to be for a short as it tracks back down to the lower levels of support. So that'll be a long-term play. And again, we'll just trade whatever the charts are doing any given time. Aussie CAD, this is our one open trade on the long-term account, and we do see that it is respecting resistance. So it hasn't breached the 94.50 at all. That was the prior level of resistance it established maybe 3 weeks ago. Since then, it's just been tracking sideways. As I was saying before, I think the Aussie pairs, and this is a prime example, are running out of steam. That doesn't mean they can't pop above or move in both directions. Sometimes with big movements along the way, but I think longer term we're going to have a trip towards at least the middle of the chart, maybe the bottom, which is why I already have that trade open on the long term account. Euro Swiss, after a lot of volatility, seems to be slowing down. It does have a bearish slant, but also has not been able to breach that level of support in quite a while. So not technically sideways, but it does look like it's starting a sideways channel. So we'll have to see how that pans out. It was a very nice retracement all the way back to the 109, and then it just stopped and then collapsed. So we'll see if it moves in either direction. For now, it's just not doing much of anything. Euro pound, and this is a rather more interesting chart. It does look like it overextended itself by moving up to the 92 level, and it's gone back down by almost 200 pips, or actually about 200 pips. We do have a pending order for the next retrace to happen towards the bottom, so very likely if this movement continues, we're going to be taken into that. I'd be happy if it does a test of that trend line coming from the bottom. That in itself would be a good initial profit. Of course, if it breaks even deeper, all the better. But as always, we're going to wait for it to happen. We're not going to try to anticipate when it will. Euro JPY has decided to follow a rather steep trend line up. Hasn't been able to breach the resistance at the 121.50. It's given it a few tries, but it's just stuck right now between that and the trend line. So technically a wedge. We'll see which way it breaks. The only reason not to take this trade is if it does break out sideways, which is a pretty clear, it's almost a given since it's riding on that trend line right now. So just on daily action, even if price doesn't change, it's going to break the trend line towards the right. So we'll ignore it if that happens, but any breakouts above the 121.50 or below the 120.25 are probably going to be interesting opportunities. Euro Canadian, this is the textbook example of a sideways chart. It is breaking the outer trend line on sideways action. The range is rather wide. It's 400 pips wide. So there are opportunities here to trade the bounces, but until it does something more significant, then it will at some point. That's pretty much a given as well. We'll be trading channel bounces on this one. Pound JPY also following a trend line, not as steep as the one we were looking at before, but still following it very closely as it tracks its way up to resistance at the 135.50. So we'll have to see which way it breaks, down or up, and trade accordingly. As I mentioned in several of these sessions, I think the yen has been unfairly punished. It should be much stronger than it is, but for whatever reason, the market seems to have fallen out of love with the yen. At some point that will change. It always does. These things go in cycles. So look for the yen pairs for really good opportunities to trade back into yen strength. And this is a prime example. Aussie JPY is another prime example for double reasons. As I said, I think that the Aussie is overextended. It moved too much too quickly. True, it has returned to a prior price range, but I think there's every chance of the Aussie giving up some of these gains. And if that happens at the same time that the market starts liking the yen again, this one could plummet to the bottom in a week or less. So keep an eye on this one for opportunities. Right now, it's breaking out of a trend line sideways, so it's really not a true breakout, and it will at some point, and I can already draw it. It's establishing a new outer trend line, but it's going to be writing that trend line as well. So there comes a point when there's really no reason to keep adding these trend lines when there's nothing much happening. So another one that's a waiting game. Euro New Zealand testing support for the second time in about a month at 172. Indeed, 172. So it's still looking nicely bearish. And this is probably an opportunity that we can play into at some point for about another 500 pips, I would say, before it reaches support. So a key chart to keep an eye on. Pound Canadian is in between trend lines, just bouncing up and down. And this in general is something happening with the CAD across multiple pairs. It seems to have just gone sideways and having trouble making a direction, no break of support or resistance in quite a while. It's very close to the previous bottom of the chart, so I'm not sure it has that much room to move down. And for many fundamental reasons, I don't think it's going to move up either. So again, it's going to be a waiting game, but if we do see a breakout, we will take it. And last but not least, Pound Swiss, also in a very wide sideways channel of about 300, 400, 400 pips wide channel, which it has been bouncing within since back in March. It's very close to the bottom, so we'll have to see if we get a breakout towards the very underlying level of support at the 110. Or if it starts channel bouncing again and we get a trip back to the 120 and a half. So keep an eye on this one. Even if it's just a channel play, it's probably going to be lucrative once it does start moving. That is the end of our charts. Setups we see in progress really hasn't changed. I did add the lack of confidence in the yen into the Japanese square there at the bottom in the middle. So I really don't understand why the market has been averse to the yen for the past few weeks. Fundamentally, there's nothing to say that Japan is being harder hit with the coronavirus than anybody else. And in fact, the opposite is true. The coronavirus impact in Japan seems to be minimal. The market fears, I think, are more concerned with trade matters as the other economies spiral down. China is doing renewed lockdowns, plus the situation in Hong Kong, which doesn't have the market pleased in any fashion. So all of this has really taken the luster out of the Japanese yen. But again, it's not the fault of Japan or the yen. And this might have a very quick turnaround at the slightest news that is favorable to the yen. So keep an eye on the Japanese pairs, the Australian pairs, and the Canadian pairs. I think that's where the next move is going to be coming from. And that is the end of my review. As always, I try to finish these sessions with a little bit of in air quotes here, words of wisdom. Today, I'm focusing on the bad math I see from a lot of people out there. And some of it is due to people taking or picking up trading as a hobby instead of more of looking at it as a business or a career. But I do talk to people from all walks of life. And as I said, a lot of them at some point or right now are dabbling in trading. Or they soon will. They're mostly intelligent. I'm not trying to be a snob here, but you know what they say, birds of a feather. So I don't tend to have too many, let me say, stupid friends. Either I bore them or they bore me, and it just doesn't work out. But anyway, surprisingly enough, a lot of them, despite their intelligence, have a flimsy grasp of math, probability, and logic, while at the same time having these huge, grandiose thoughts, hopes that almost verge into magical thinking. And I picked this as the topic for today because of some conversations I've had recently, especially due to the shutdown. A lot of people are discovering trading, and I see some of them bragging that they did 5% in a day or 20% in a week or whatever. and they think they can just multiply it by the number of days or the number of weeks in a year and come out with some magic number of, well, I'm going to make 1,200% or 600% or whatever a year based on what they did in 1 week. That's not the way it works. If anybody could consistently um, continue performing at those levels. I mean, I've done 80% in a week. It was a great week. And then I promptly, gave it back because when you're trading at a level where you can make that sort of gains, and this was before I buckled down and did all my discipline exercises and whatnot. And the only way you can make these high gains in a short period of time is by throwing risk control out the window. So yeah, you can get lucky. It's the same way that if I grab a loaded gun with just one bullet in it, spin the wheel and start playing Russian roulette, well, 5 times out of 6, nothing's going to happen. But it doesn't matter. If I play it long enough, eventually that sixth time, the 1 out of 6 is going to happen. And that is the end of the game for me. And again, it's all risk control. So yes, you can make insane gains in a short period of time. No, you can not make them every week or extrapolate that to arrive at what you would make a year or whatever. So what I tell these people every single time is, I'm glad for you. I'm happy for you. Go and play and come back when you have a few years of data to show me. And hopefully with those same level of returns, then you know what? I'll be following you instead of you following me. Also known as the "why aren't you rich yet" response, because you just don't get rich in a week. If you could do that every week for a year, then yeah, you probably end up owning half the money on the planet. So anyway, that is my end of or start of the week spiel here. And that is the end of this session. Do I have any comments or questions from anyone? Okie dokie, then thank you very much. I will be sending a recording out very shortly, and I will see you guys throughout the week. Have a great end of your weekend.